Hi everyone. I welcome all my viewers on the behalf of Shopping Center Association of India. See, at SCAI, we are dedicated to fostering the growth of the shopping center industry in our country. Sharing knowledge with industry professionals is a crucial responsibility we uphold. One of the ways we achieve this is through our monthly magazine, Mall Talk, which delves into global best practices and strategies within the industry. SCAI hosts virtual workshops, masterclasses, and physical sessions to facilitate learning. Each month, we organize webinars focusing on subjects aimed at enhancing operational skills for industry professionals. We invite seasoned industry professionals who generously share their experience and insights on operational matters. Our goal is to keep you informed about best practices implemented in shopping centers worldwide. The monthly webinar series is one of the ways we achieve this. The topics covered in these webinars are carefully selected to aid industry members in improving their knowledge and day-to-day operational efficiency. Today's webinar holds a special distinction as it features 5 esteemed industry leaders as speakers. Their real-world experience provides invaluable knowledge for your day-to-day operations. The subject of today's webinar is financial compliance on operational assets. So let's meet the amazing group of industry leaders we have with us today. Nitin Khanna. Nitin is CFO of In-Orbit Malls, and he shall be moderating this session. Then we have Snehanshu Datta. He is CFO and Company Secretary of Quest Properties. Amrish Rai, he is General Manager Finance, Pacific Mall Group. Vatsa Ishwaran Iyer, he is CFO, Lakeshore India. Viewers, feel free to submit your questions. The panel will address them after the session. We are confident this webinar will be a valuable learning experience. So let's get started. Over to Nitin. Nitin is moderating the session.
So good afternoon, everybody. And as he rightly said, this is a esteemed panel here. From a mall industry perspective, we look and we take care of 2 industries as specific. One is the real estate, and second is the retail industry. And as a result of which we have, additional complexity to handle this entire part. And as we embark upon the India growth story, it is important for us to smoothen this entire process. And it is imperative and important for us to understand, what are the pain areas, what are the critical areas where the finance folks, my counterparts and peers are facing in the industry today. So I'm going to start with GST today. I'm sure there will be a series of such webinars, and Anji will be kind enough to allow us that participation. So let's start with GST, and this question is very specific to the entire panel. How do you all manage this entire GST compliances, and we have also seen a recent spurt in GST notices coming around 3B reconciliations differences. So just wanted to have your views. I can start with Amrish, who is there on my right side with the alphabet A. Yeah.
So thanks, Nitin. As you said rightly, that we represent 2 portions of the business. One is real estate where building happens. So yes, there has been a spurt of notice for in states. We operate in 5 states. So like Uttarakhand raised notices for 5 years, Delhi for 2 years, UP for 1 year. So everywhere it has come. And we have residential in Uttarakhand. So there it's a separate team, separate kind of thing. But what we observed in most of them is that these are computer generated things where GST, everyone knows that there has been a problem that if the GST, if somebody has filed its 3B return and 2 years later the government has suo motu cancelled his GST, then so most of these problems happened because of that. And I think there is a new clarification which the GST Council has issued, which says that no more that suo motu cancellation or post predated cancellation will not happen. So we have been able to, the work increased, but thankfully in the retail side, all our notices got cleared and all our assessments happened in about maximum 2 months. But yes, I think government is doing a lot of things. So this is one of the things. Residential, it's an entirely different story. So that, but it is where challenge happened in terms of manpower, everything coming at one point of time. If you are in various places, so that it was a lot of challenge. But once we understood the problem, once we met them, so whatever replies we, they have been fast enough for us. It has been fast enough because that's how it happened for us.
Yeah, thanks. Ishwaran, you want to jump in?
Yeah, so I think GST as a law, right, has been one of the path-breaking initiatives by the government, bringing in first of the kind integration of digital and the B2B B2C consumers in one platform. I think the digitization mandate, as the government had always in its mind, was truly reflective when this particular law was in place. The mechanism of auto integrating your 2A versus 3B, the e-invoicing in terms of ensuring all your output liabilities properly reported and accounted, issuance of matters which involve underreporting of income or input credits which were not legit, which were being considered, were all basically because of this entire law, and that law was supported by a strong backend digital framework which enabled them to integrate data from not just indirect tax but also direct tax, which is your 26 years with 2A recons, and all of this is basically an initiative which they brought in with digitally assimilating data, right? There are obviously challenges in terms of interpreting and reading those data points. And given that is machine learning, there are a lot of AI tools that they use to enable issuance of notices. And given the voluminous nature of this transaction, there have been notices which were issued, which were probably not properly integrated in a manner that it ought to technically be. But that's a learning curve that anyone goes through as a process when you integrate information. And there are some situations where notices may have been issued with incorrect values or probably incorrect years referred to. But I think those are teething issues, if I put it that way, from a long-standing perspective of ensuring that your entire business is digitized, your records are digitized, and you are able to integrate a lot of information to actually pick up the exceptions, pick up the nuance gaps, and focused assessment rather than just tax officers barging into your offices, sitting with a pile of invoices, recording each invoice, ticking off each credit, which was cumbersome, which was manual. It was also person driven, right? And there was a lot of ambiguity associated with the outcome of a particular process, in contrast to what it is right now. So to answer your question, Nitin and Amrish, basically this is basically a path-breaking reform in a manner, if I put it that way, as a law, right? That law backed up with a very strong digital framework through which they operate, yeah. And the issues on notices or audits, which are basically appear to be right now not accurate, or to the extent that it is not accurate, is a teething issue, which I think will iron out over a period of time.
So what I have gathered, what both Ishwaran and Ambrish are talking about. So one, I agree, it's more of an teething issues. Law, any new law which comes in, there is a learning curve. Let me go to Shirivach and take his views as well. So what do you feel, Shivaj? Is it more of a teething issue, auto-generated, or are there any other issues as well?
Hi, Nitin. Yeah, I think Amrish and Ishwaran summarized it all. So basically, as Ishwaran rightly has summarized it, these days government is less dependent on what we furnish our details. They already have a digital backbone which is collecting information about taxpayers. So information is already available with the department, and that is where it becomes very important that we have our discipline in terms of accounting, especially when it comes to input credits. Have a proper reconciliation while you claim the credit. So input credits is one of the things which is mainly causing the difference. Yeah, there may be some teething issues, but otherwise, per se, we will get into trouble only if we miss that discipline. So it's important that input credits, especially, we track properly, we account, and we reconcile the credit what we are claiming. So if we have maintained this discipline, probably the notices should not affect us, or even if the notice comes, we will be able to address it.
Yeah, so good. So what I have, what I have gathered from you is it's just more of a discipline issue. So if you do things right and the system is generating, if 2 matches with 2, then you will not have any problem. So let's go to Srihanshu and understand whether he is also of the same opinion or he has some diverse views on this.
And we also have a residential construction project in Haldia, which is nearby Kolkata. Now, so far this GST compliance is concerned, basically we have a small team who are basically collating the monthly data from our this system, ERP system, and basically we are preparing the inputs for the monthly returns of GSTR 1, 3B, and also for the annual return. And side by side, as we are a small team, so we also take support of an external consultant. Now, so far this GSTR notices are concerned, I think when it started, there were a lot of teething problem, but over the years, I think government has done a remarkable job and a lot of integration has been done. Initially, we used to receive notices which were basically there was some arithmetical error, so like that stuff was there. But after this, all these things have been resolved by the government, I think presently. So 1 or 2 notices have arrived where we have to do a proper reconciliation to represent our case. So more or less, we have managed the notices without any adverse liability on our side. And I think this is a very we have to be very disciplined over the years, and we have to timely file our returns so that we can prevent all this repetitive notice from the government authorities.
Yeah, well summarized. I think so. What I've gathered from all of you is government has done a great job. Let's give a thumbs up to the government for subsuming so many taxes into one. I remember those days, when we had excise, service tax, sales tax, state-wise VAT, and different warehouses used to do stock transfer. Retailers also had issues. So at least the best part is that we have one tax. Second, teething issues. We all know that any new law which comes in, comes with the teething issues. I think Shivats had put it rightly. If you do things rightly, if you are disciplined, you'll not have issues. I agree with Amrish. We still face, even the government is facing resource issues. As we are also learning, I think government is also learning. The kind of resources they have put in is tremendous, and slowly they are trying to match two things. As Nehanshu said, there are things in the system, and they are trying to match everything with each other. And as Ishwar said, there are errors. Everything they're gonna learn, and then they come back to us. So I think over the period of time, I think we have all settled. There might be few areas here and there where we'll still get GST notices. I think over the period, we have understood how to kind of address this and manage this. There's no longer that that scare of, somebody has asked this question and we all used to get scared. So let me go to a little specific issue, water and electricity. We all know that from a CAM perspective, water and electricity has been a bone of contention, and different states, different ARs have given different pronunciation. There was a recent circular also. So let me start with Ishwaran on this. Ishwaran, tell us how are you managing this water and electricity part?
So historically, and we've been managing assets for the last 6, 7 years now, and ever since our first asset that we started running, we went through a little bit of detailing in terms of what exactly is the issue in terms of what is the value add. So to the extent where either GST comes into picture is the perspective whether you're adding value to the entire value chain, right? The moment you end up adding value, even if it is as minuscule as anything, right? To that extent, then there's a tax liability associated with that. You're providing a service, right? It's not no longer a pass-through over there. You're not a pure agent because the element of the definition of pure agent ensure that you are end-to-end passing it on to the end customer, and there's no value add that you're bringing in between. So if I pick up an example of utility, for example, so you have the entire transmission lines, right, that bring in power to your mall, and from there, thereafter, you end up distributing, right? To an extent that there's an element of you putting capex, right, and having a service to receiving all of them into one feeder line, and thereafter distributing to individual retailers. You eventually are providing a service on behalf of the utility provider, right? There's an element of early payment discount. There are element of transmission losses. These are components that you make adjustments to before you end up billing it to the retailers. Because see, if you're getting a transmission loss, right, which is minimal, that is because of the capex that you've incurred, so that you are able to achieve efficiencies in terms of energy distribution. Early payment discount is basically a working capital management process where you're able to ensure that you get that benefit out of payment in advance, right? So all of these processes, all of these elements, when we break it down specifically, it brings out an element of a service that is being provided to the retailers on behalf of the utility service provider. So we have always maintained that there is an applicability of GST on utilities. Similarly, when you come to water, so there is a component of raw water, there's a component of processed water. Now, to an extent, there is a raw water that is being transmitted from the tankers and eventually given into the end user. And what is also being used in common area, it is being used in the retail area. There's F&B section, right? Now, to an extent where you're processing water by using chemicals and ensuring that the RO is generating healthy, safe drinking water to the end customers, to the F&B retailers, and thereafter to the end customer, you're actually doing a service on behalf of the customer. And hence we have maintained a position that processed water for the F&B and eventually the retailers is a service on which GST is applicable. For raw water that is consumed for common areas, be it in terms of utilities that are you providing to the customers, they aren't applicable to service GST because it's just raw water that is being transmitted. So specifically on utilities and electricity and water, since day one, we have always been maintaining a position of charging GST on these two services being provided by us on behalf of the utility providers.
Okay, so what I have gathered from you, it's a in both the cases is actually a service provision, and we can't term it as an agent who's just taking the services as it is and transferring it. There is a value add, which we as small service provider are putting it to the retailers. Let me go to Shrivat. What's your thought process on this? Are you charging GST on your invoices from day one, or there's a practice change in between? How is it?
Yeah, the current position is similar to what Ishwaran has explained. Initially, when our forum malls at the beginning stage, some of our malls, there was, these days, one point we have to see is whether we should get into this debate at all, because anyways, there is input credit available for other tenants. So only pushback which is coming is from the tenants who will not get input credit, which is majorly F&B industries. In one of our malls where F&B was significant, there was sort of pushback. They were seeking for not charging this to consider this as pure agency transaction pass to pass. So we also agreed at some stage, and we were not charging GST, we were not considering it as taxable. But that backfired to us very badly. Every year we got notices and we had to fight a lot. And the people who really benefited is retailers. So we have indemnity clauses saying if we end up paying a demand which we couldn't uh, uh, fight out, they were supposed to reimburse us at that stage. But what happened is all these notices, these assessments, audits, everything will happen over a period of time. By the time this gets settled, probably you will not have those tenants who would have given you indemnity. So such kind of, I would say, rather unnecessary headache, which is on the malls, if we really take that position. So finally, we changed it everywhere. At this point of time, we are taking a position, as Ishwan rightly summarized, we are taking a position that it is a taxable service for mainly two reasons. Number one is department will definitely come behind it, take a position that it is agency service. They are not going to leave it. They are very clear, very clear view that it is a taxable service for all the reasons which Ishwaran has already summarized. And if at all we take a position as a pure agent, it will definitely go for dispute, and it will have to finally get settled only at a higher levels of court, High Court, Supreme Court. So that stage it will definitely take. So the question we have to ask is whether really as a mall, should we take that risk at all? Especially when majority of the tenants also will get input credit. Only the F&B tenants may have some problem, but overall, definitely this will be a dispute case if we take a position as pure agent. So the learning from our history is that it is better not to get into that, offer it as a service, and that has been the uniform practice we have been following now in all our malls.
Yeah, thanks, Vivat. I think you're not alone. We also went through the same learning curve. We also, we had a detailed discussion with authorities as well. And I think it was more of a concept rather than, retailer getting a credit. And then we went through the learning curve, and the good part is, there is a recent FAQ and clarification. Let me go to Ambrish. What is the practice you are adopting right now?
So, Nitinji, you, as Srivats, Ishwaran, and everyone has said that it was a learning curve. Water, we were there with GST from the start. Electricity has, various challenges which everybody has elaborated. There were challenges from tenants, the understanding, GST has been an evolving law. People were initially trying to find a way out of it. Retailers putting a pressure on us, newer malls coming. So all that thing coming, and as again, that learning curve thing happened. And so we had to decide, and we have decided that, and as rightly said by Srivats, that FNB is one end which is getting affected to an extent because they are at 5%, GST is 18%, so there is credit, which we are trying to figure out a way how we can get there. But as a concept, we are there now, 100% GST compliant in that sense. The risk and reward doesn't, as rightly said earlier, is that the risk and reward doesn't match up. The time, energy, effort, and everything combined doesn't match up. So there's everyone is getting input apart from a few small set of people, which should be handled separately.
Yeah. Yeah, over to you, Snehanshu. What's your practice in Quest? Have you started charging? Are you getting, or you're also going through the learning curve and not yet decided?
No, we have been complying with the GST provisions so far electricity is concerned. Regarding this water, so it's a very minuscule value as such compared to electricity. So it is basically a part of our CAM. And the CAM there is no separate profit element on that. So whatever cost we incur, we do an annual computation at year end, and we recover the cost from the retailers. And on the electricity front, we are charging the GST. But there was a circular in October end regarding where much clarification was there regarding this electricity, which I think as clarified, it's a part of the composite supply, where two or more services are naturally bundled, and one of the services, which is the principal supply, which is basically your renting service or annual maintenance. So whatever rate will be applicable, that same rate is applicable to your other services, electricity and other services, though they are being termed as ancillary service. And another concept of pure agent has also emerged. So on the electricity front, we have the submitters right from the beginning. Separate submitters are there, and whatever electricity rate basically the power company or DISCOM charges us every month. So that same cost only we basically recover from the retailers. So on that front, but still, as this clarification has come recently, so we are deliberating on this, and maybe after some discussions going ahead, we may take a call, as some of the retailers like the FNB are definitely they are basically requesting to whether any further refinement can be done on the issue.
So
Nitin sir,
regarding
also-
this, regarding the circular, yeah, sorry, Amrish, you were saying something. Yeah.
So I was saying that with GST, if we are charging GST and we are compliant with the services, as you had said that we have done some capex and increased our load factor and losses and everything. Also, the concept of open access, captive power. So that if I'm charging GST and I'm being compliant, then whatever benefit I can derive from those kind of things. If I am able to get electricity at a much lower cost, then I'm not a pure agent. So I'm charging GST because I'm giving it at a X rate. So it helps. Nobody can then question that you're getting at 7 rupees and you're giving it at 11 rupees. So putting GST also helps in if we use the latest available things. So open access and captive power we have done few of those things, and they have helped us in terms of monetization of also. So GST, I don't think should be avoided on this.
Yeah, perfect. So what you're saying is right. Even in our case, we have gone through the same learning curve, and even after the circular has come, we have not changed the practice of charging GST on the face of invoices for water and electricity. I think it's more or less settled till the time there is very clear cut. I think it was little ill drafted circular, I would say. It could have been more detailed. I think over the period as we go along, there will be much clarity which is coming in, which will come into the system. My next question was again, which is so this issue has been a bone of contention for both the retailers as well as the mall owners or mall operators like us, which is the gift vouchers. This is a very common retail practice where the retailers actually go and give us these gift vouchers, and we are using it for promotion. But few of us have included in the contract, few of us have not included. They treat it as distribution. GST has a diverse view on this. So let me start this time with Snehanshu. Do you have any point of view on gift vouchers? How are you managing it? Is it do you feel it's one of the best
Actually,
practices? How is it?
on this gift voucher front, we have a very minuscule value. So we are within the 20,000 cutoff, which the TDS section 194R has basically cited. So we haven't increased that. So in our mall, it's used on a very minuscule base. So more or less we are continuing with it, but as that cutoff is very small, so we are not facing that challenge immediately.
Amrish, any views on this?
So, as you said, gift vouchers are of two kinds. One which we are getting, and we as a company have that in our agreements. So those are there in our agreements. So that part, we are getting it. So that primarily is not our responsibility to be handled with. But the problem comes where we have that agreement where we are giving to mall operators, tenants, supervisors or their people there, and with 194-hour clearance coming, and there's no much scope. 20,000 is a very small amount while you are giving it to the tenants at our end, at this end. So we have decided, and in past also, for last 2 years, we have been doing it through taking the PAN detail. If it crosses 20,000, deducting the tax, and so we have been doing it for at least 2-3 years, which I have seen on that side of the story. We have been doing it for a time. So we are cutting TDS, we are depositing that, and that's how we are doing. But that portion has been, it is increasing. So it is one thing where if somebody has any input on that, that has to be seen. And it is becoming cumbersome also. Number of tenants which are crossing the threshold of operation, so, and they change, same operator doesn't remain, the same mall manager doesn't remain. That's So if he changes, then I have to again go and get new PAN number, new identity, open a new ledger in my books.
Yeah.
So those challenges are there if somebody has a solution, but we are still complying with whatever we have to comply with.
Yeah, no, I agree with you. So any point of view from Shevats?
Yeah, no, our position is similar to what Ambrish told. Also, this 194R is mainly impacting now. There is a lot of more promotion activities we do wherein we give, it may be vouchers or some kind of gifts, it may be some coins or some other kind of gifts to the retail customers who come to the malls. These things usually happens to promote the footfalls, and so all these things are probably now getting covered with the 194. Earlier also there was that 30% TDS of 194B, the lottery TDS section, which was applicable, but there we were taking call whether it's a game of chance. So all such discussions were used to happen. Now it is more to decide which section it falls in. So TDS is a definite applicability. So wherever there is a game of chance, 194B will be applied. That is the position has been taken. If there is no game of chance, it's only a gift we are giving. 194R, depending on the value, if it is coming in the threshold, we have gone into that. The only question we have to ask is now if we have to do TDS in case of gifts to the retail customers, how do we do? Whether we collect that portion from the customer or we bear it as additional marketing cost. So this is the only question. So not many events have happened. When the event happened, probably we have to take a call on that. Whether TDS we will take it as additional marketing cost, or we though it is a free gift to the extent of TDS, whether we have to collect from the customers. That is one question we need to answer probably in the events which may come in future.
No, interesting. So we had an interaction with the GST officials on this, and they had a very distinct point of view that if we are taking gift vouchers from the retailers, it's actually a part of rentals. And then we had a ongoing exercise with them, trying to explain to them that whatever gift vouchers we get, we only distribute it, and we do take a letter from the retailers that this is not part of the consideration, and then we are just taking some 500, 600 rupees just for distributing this, and which actually happens. So we don't have any interest in terms of gift vouchers. Their contention was that you're reducing your rent to the extent of gift vouchers you're getting, and they went ahead and then they did issue a few notices here and there. But we were, I think they were kind enough to understand this. We went through the entire process of learning, make them also learn. It was good for the entire industry because what happens is if one team doesn't understand, it actually percolates down and it went viral. So I think we were able to settle this and make them understand that whenever a customer is actually buying any goods or services over the counter, they are paying the GST because the final bill, uh, while they are redeeming, the final bill includes the GST amount. So I think they were able to understand. We gave them all the supportings of, how it is being charged in SPA, how it is getting charged in FNB, and few of the apparel brands also. Uh, Great. So any point of view from you, Ishwaran, on this gift
So
vouchers?
largely aligned in terms of what the participants have just communicated. So the only piece that I want to just articulate is there are concepts of conditional gift vouchers and non-conditional gift vouchers. So to the
Yes.
extent that it is non-conditional, right, and it is equivalent to cash for us. So it is just in the form of rentals, as you mentioned, that in the part of a rental which you are getting in the form of GVs. Yeah. During COVID, there were a lot of retailers who came up with a situation wherein they were willing to pay rentals but were seeking in lieu of rentals or can pass on gift vouchers, in which case we gave credit notes for rentals, but we also charged GST on gift vouchers. Now retailers came back and said, okay, this is a marketing cost, this is a marketing event document, and you cannot charge GST. And we ended up eating some cost of GST as well in all these matters. So yeah, so from our perspective, the position that we are taking is, to the extent it's non-conditional in nature, it is equivalent to a rental in some other form, right? And we charge GST on that. To the extent that retailers are not accommodative to pay GST on that, we have consumed that cost within our part of our cost itself. In case of non-conditional gift, in case of conditional gift vouchers, it's basically an handling process that you're doing on behalf of the retailer, distributing customers, so on which GST is not applicable. Coming to Shivatsa's cost in terms of whether you're doing it for marketing events, right, on TDS and all those matters, we have taken a position that we aren't. We do take KYC from retailers, but we do not load on to the tax to the retail because it's very difficult to collect from them, and it loses the very essence, right? So to the extent that for us, customers are basically the king when they walk into our malls, and I don't want an administrative headache for them to collect and pay TDS. We have largely accommodated that within our marketing budget and consumed that TDS associated with weddings and lotteries and all of that.
Perfect. So thanks. I think it was quite informative. One thing is also, it's a learning for me as well that we have different practices. It is important for us to share with each other, and of course come out with solutions. Thanks, Ishwaran, for providing that solution for Shavas. I think even I was also of the same opinion that we have to kind of absorb that cost and not unnecessarily inflate this to either the customer or retailer. Good. So just a 1 minute touch on how you're managing your GST audit. I'm sure we have gone through 2 cycles of GST audit, and if you have any experience on search, Caesar, anything you want to, maybe I can start with Ishwaran this time. Yeah.
So yeah, it's cumbersome, to be honest. It's not easy. But having said that, I think I've been fortunate enough to be meeting a set of people who have been reasonable enough. Yeah. So end to end over a period of a month or two, largely the audits got completed. It's more about explaining to them the process, right? So long you give them a comfort that okay, the backend ERP is strong, the documentation is fine, and you are able to complete that reconciliation, like specifically my annual return reconciliations, backups, and then the supports. That gives them enough comfort to start with, right? That is where their entire the entire process gets decided. And then thereafter, it's just about detailing around sample copies of invoices, and other reconciliations that they deem appropriate. We have actually carried out audits in my previous organization prior to Lakeshore under Service Act as well, and those reconciliations at that point in time were really helpful in terms of how they actually gauge your records and your bookkeeping. So to the extent that you have data that are reconciled, you have a strong ERP that throws out information for you, and you have all the original supports, proper filing mechanism is all carried out, right? I think it largely settled down well. Fortunately, within Lakeshore, we have not been served with any notices that's coming after an audit process. And I've been fortunate enough to be to not have any adverse situations on all these audit processes.
No, great. You it's just not question of luck. It's question of all the hard work which you had put in.
We had a GST audit last year for a 5-year tenure, and it was a very mammoth exercise. Now, basically, the purpose of this GST audit is basically they want to verify the correctness of your what turnover you have disclosed in your return, whatever taxes you have paid or refund you have claimed, and the ITC which you have availed and utilized. Another thing is the correct classification of your goods and services. And in addition to this, they are assessing whether you have complied with the other provisions or not. Now, so far this submission is concerned, basically the department is now equipped with the GST manual. Their entire team has been basically trained with, and they have been strictly directed to follow the audit manual, and they are very much organized. And now we have a host of submissions right from your audited accounts, tax audit report, ITR, annual report 26As, internal audit report, cost audit report, and whatnot. In addition to this, you have the sales reconciliation of your audited financials and your GST return. Then your this outward supply register, invoice copies, your purchase and ITC register, bill copies. Then you have that reverse charge calculation with your expense ledgers, the select expenses which are coming under the reverse charge. And I think so a lot of submissions have to be made to the GST team, which are getting this audit as under Section 65. And basically, they are issuing you a notice around 15 days ago, and then requesting you to basically submit all these reports. And after that, basically, their team comes up and visits your premises, basically. And they are around 5-6 people, and they are experts in their different field. Maybe one is handling this entire sales, another basically guy is looking after the ITC, and then some other guy is looking after your basically the related party transactions, another guy is looking after your sales and 26As RICO. So you go through your team goes through a lot of challenge, because you have to manage the operation side by side. You have to also get this GST audit through the couple of days when the GST officers are basically in your office. Now, finally, they have their observations, and which you have to agree, and pay the taxes. Else, so hopefully in our case it has gone out smoothly. We had to pay some interest. Some interest was there. There was some error in our calculations, and also some minor ITC. Basically, ITC was disallowed as basically the concerned vendor didn't file the return. I think they have a robust system, and whatever data you have, they come very prepared. And I think so most of the this ambiguity gets resolved immediately. So as their software is, I think, very well equipped, so there isn't much problem at their end to highlight any of the errors. I think more or less it was a very detailed audit, and finally we came out. Maybe we had paid some interest and some minor this GST ITC which we have to reverse, but overall the experience was good. So that's it.
I hope few of our bosses should listen to the what Snehashu has said.
Absolutely.
I wonder if they are there in this discussion, probably they would have understood what we all go through on a monthly basis and yearly basis. So I agree with you, Snehashu. I think there's a lot which we have done. We should pat our back on, at least we have reached to a level of compliance. Of course, government has put in a lot, but there's a lot of hard work which, we and our teams have put in. So let me go and ask Shevats, what's your experience around this entire, audit, meeting GST officials? How was it?
Yeah, I think the last part, what Ambrish told, is really the bottom line. The systems have been maturing now. The digital backbone which government has been establishing, and the data mining what they are doing. So you are covered with CCTV everywhere. So the first principle what we need to maintain is don't try to be smart. So take positions which are very clear, which are very systematic, and which is in line with the law, and manage your tax compliances with discipline. That is the only key aspect for not getting into any difficulties later. Otherwise, you are just postponing. If we try to act smart, we will be caught in future. That's all. So our audits per se, not much of issues. Things have gone smooth. So not much of issues we have faced. So I don't have much to explain on that. But yes, so basically the important thing is maintain the discipline. Don't try in terms of compliances.
Yeah, I agree. Means anybody else has any opinion on, or shall I go to a different topic? I just want to summarize. Ambrish, you want to come in?
Yeah, so there was this question about if there has been a search and seizure which has happened somewhere, if somebody has any experience. That was one of the questions which were what learning do's and don'ts. I think more of people are saying, but if there is some experience any one of us has, and if we can have some highlight on that.
So I had so we went through this entire search process. I think we were the initial ones from a mall industry. So as Ishwaran and everybody had rightly put in, the first thing is to get your documents up and ready, and they should be within your easy reach. So the first hour, or it's the confidence which you can give them in the first hour is very important. As Ishwaran rightly said, if your ERP is strong, and as Nehashu said, if you have all the documents where you are matching, everything is matching to the T's, and as Shiva said, you don't need to be smart. So that's something which plays an important role. Second, I think any GST official coming in, they're not aware about your business. It's important for you to make them understand what your business is, along with some documents, maybe a one invoice, and tell them, look, this is our business model. This is how the entire finance line happens. This is how we charge GST. These are the compliances which we do. This is an ERP which everything is through ERP. Like Ishwaran said, if you give them confidence, I think 80% of the problem is resolved. They are pro revenue. There's no doubt about that. They are there to to find something, and as Snehashu said, they are well prepared. They have done their homework, while they are coming here. So they understand out of 5, 6 issues which everybody was kind of there's a 3B RICO, you have taken ITC credit. They understand there is something in trans one which you should not have utilized, whether you have an invoice or not. So I think those are the regular issues. I think they do come prepared, and they have a ready checklist. But they are not offensive. They want to understand. They want to learn, and there are times when you have to convince them that you're compliant. So these are the few top of mind you know practices which our learning rather from few search which we have seen in our business and in the group. So let me just change our paths and then go to a different taxation, which is direct tax. 26 AS, I heard quite a bit of 26 AS reconciliation. So let me start with Amrish. Do you still feel 26 AS reconciliation is an issue, or you have overcome with? How is it?
So
Means
I think 26 AS issue happens mostly because of the TDS or any detail or document which has not been entered. If there is a lacking which is happening, that is where 26 AS and Form 16A mismatch happens. And in case of salary, I think there is this clause where if somebody has not TDS has not been deducted in the first quarter, then that time salary doesn't come. So that is one for salaried employees which employees come and we have to tell them. But for business perspective, one point or the other, you will find that there is a mismatch, a flaw which has happened at your end, or the guy who's deducting it. Somewhere there is a flaw, and we do reconciliation whenever we take out the reports. We do reconciliation along with our books, go back to the customer, try to do it. Challenges are there. It's as GST reconciliation and TDS reconciliation. In TDS, you can file any point of time, and in October you are filing for April. So it's a very dynamic thing. So it's a manpower involving thing. And so we typically say you will do it once in a year only. But whatever we have improved in terms of input, where the input is correct, the TDS reconciliation is correct. This is our learning in nutshell over a period of time. Whatever we have done, we have seen is that.
Shivats, Ishwaran, any point of view here?
Yeah, on this TDS per se, we follow a practice of accounting for TDS at the point of invoice itself. The differences can be two types. One is non-compliance by the tenants, but another thing is the difference comes because of applying different rates. And a lot of tenants will end up doing same TDS rate, especially when you have both rent and maintenance. They may apply a rental TDS rate itself, that is higher 10% rate itself on maintenance also. So there are lot of cases where we have difference between the TDS what we have accounted and what they have really deducted. One thing what we have finally reached is again here the discipline. Have your reconciliation quarterly itself, so that you will timely detect any differences, and you can take action upon it. If we really wait till our ITR, then these problems may come up. You will only realize late for any non-deductions or short deductions, and the tenants may go and revise their old TDS returns. You will be in a fix where you don't have claimed it in your return, and later you will not get credit. They may come back saying that they have done TDS, but they didn't do timely, which will affect us in our ITRs. So best practice is probably to reconcile it quarterly, so that we identify if there is any mismatches timely and take action upon it. And if we really religiously follow it, we will not have last minute pain during the ITR.
So from our side, Nitin and Shivat, what we have been doing is we've been recording withholding taxes on a receipt basis. Now, that is one of our critical reconciliation issues wherein we are not aware if the retailers actually accrue for that particular invoice and pay TDS, or have they. So there would be a pertinent gap for us always, where there could be some retailers who have actually accrued, not paid the invoice, but have a deposit TDS. There would have others who have not accrued at all and would have paid on a receipt basis. So we have taken a position that we accrue it on receipt basis. We do a quarterly reconciliation, and basis which, in the event that there are mismatches where the retailers have not filed their tax returns or probably have not accounted for the invoices, we convert that TDS receivable from our to the proper receivable, right, into an actual receivable, and give it to our collections team for follow-up on collections. The other pieces that we feel as a challenge is they end up revising returns periodically, right? Basis which a certain credit that you've taken on a quarterly basis, right, would need to be reversed. Because typically at the year end, what happens, this is a challenge typically on tax return filing periods, when you need to do a reconciliation of income offered for tax with the 26 years that you're claiming as a refund, in which case there are certain credits which the would have been reversed by the retailer for whatever reason, and hence you will not be eligible for carrying forward or claiming the credit or carrying forwarding that credits into your future year. So these are practical challenges that we have been facing historically, and I don't think these will go away, given that even though there's an obligation of the retailer to give us Form 16 on a quarterly basis, for all practical purposes, we do not get that, right? So there would be an element of persistent challenge surrounding that. What we have taken as a group for us as a practice is we have reached out to the department for low withholding taxes under 197 for entities where we believe they are eligible for, so that at least the element of reconciliation or the quantum of cash involved in this process is minimized rather than anything else. And we have to deal with the lesser cash value rather than dealing with the low value. In which ways we pay advance tax on a quarterly basis. So for us, as far as the revenue is concerned, they get their taxes on in advance on a quarterly basis. It's just a mechanism of ensuring a control over a retailer, which we are trying to minimize to the extent possible by applying a low withholding under 197.
Interesting, Ishan. I understand this 26 years is a difficult task. The reconciliation is an issue, and I think over the period of time, the reconciliation items have got reduced, but there are still differences which we have to manage. I think over the period of time, maybe we can take up with the tax authorities also on this and make sure that we get Form 16 on a quarterly basis. Yeah. Let me go to
timeline for where.
Yeah, sorry, Amrish.
There has to be, for, as everyone is saying, everyone does. We take quarterly reconciliation done, but what happens is that, as Ishwaran said, getting Form 16A from the tenant on a quarterly basis is a daunting challenge. We also get it from our collections. We put that to the collection, but eventually it is happening, and then the time passes, and collection, it has its own. So as I said, it was a manpower intensive job. But as you are saying, Nitin, that we should raise it with the department. There has to be a timeline for when the TDS has to be filed.
I agree.
Discontinue. Everybody, 2 years later, also somebody can do something.
Yeah, you're right, and you end up either paying a lower advance tax or there are tax mismatches, and ultimately you face issues. Yeah, so this is something, yeah, definitely we can take up with either tax officials. Let me go to Snehanshu, and I'm cognizant of the time. Maybe a quick last question. Maybe your views, Snehanshu. There's a lot of noise about this faceless assessment.
Yeah.
Are you also getting some challenges around it?
Yeah. In fact, our this assessment for this 2023 was entirely through this faceless regime only. Now, the challenge is that the concerned income tax authority, if you are doing a faceless assessment, the gentleman on the other side, he doesn't know about your business fully. So the problem is that a lot of queries are being raised, which is very difficult to put it in writing and basically file. And one-to-one understanding whatever is my thought, I am unable to basically make him understand through these written submissions. And I think the list of queries have increased manifold. Basically, these queries are around 3-4 series of queries are coming. So on an average, you are right from 15 to 35, 40 queries are coming after brief sessions, and the timeline which they are giving is very short. So there also you need to prepare and answer them properly. So it is becoming challenging. because the timeline they are giving is very short, and so when it becomes difficult because a lot of unexpected questions are also there. The standard questions we know, but a lot of unexpected questions are also there. So yeah, it's challenging, and I think going forward, this will be a trouble for many large corporates.
Thanks, Yashu. So, I'm cognizant of the time, and I had quite a few questions, but maybe in the next session, Anji will be kind enough to give us some
No,
more
definitely.
time.
I think the session was very interesting. What I am seeing is nobody has posted a question. That means that shows the beauty of the session, that you had explained the things in such a beautiful manner कि जो viewers हमारे उनको कुछ लगता ही नहीं कि कुछ पूछना भी चाहिए, because you have explained each and everything. Definitely you have मतलब I'm not a person from the finance background, but really the way you have discussed and explained the things, all my viewers must have enjoyed it, liked it. So let's wait for 1 or 2 minutes if we get any question, because what happens is once the webinar concludes, then people start sending the questions. So in the meantime, I would suggest Nitin, why don't you just summarize the session? It will take hardly.
Interesting. I would say that this is the first finance session, and let me put it that it was very interesting. One is we had diverse point of views. The best part is, as you have diverse point of views, we get best practices. And then this is very important for us. Even going forward, we should be connected. We should have more such interactions around it, and maybe best practices help us to just adopt and adapt. So we don't have to reinvent the entire wheel. If we come across any issues, we know what are the probable solutions. Second, I think it's very imperative that the government is trying very hard on two things. One, a compliance part. Second, compliance through systems. It's more of digitization. Uh, and digitization in such a manner that everything seems to be connected. So your entire value chain is so connected that non-compliances or somebody who has an intention to cheat law probably goes down. So I think that's very important aspect. And as everybody, all the panelists have rightly said that we need to be disciplined. We need to be up the charge. We need to make sure the tax official understand our business and what are our complexities. I think they are pro revenue, but they definitely want to understand and help the bigger story. And as we embark the India growth story, I think these are very important uh, important steps in order to make sure that we don't get into smaller issues, and rather look at bigger picture, bigger growth aspects going forward. So I think that is a one word of summary from my side. Any of the panelists want to join in, any one word or a small sentence on summarizing this entire discussion?
See, one thing I can say that we will have at least 2 to 3 sessions in a year on finance, because it's a very critical things and a very critical department, and we will try to have at least 2 to 3 webinars in a year. And my only request is, okay, now I have got a question. It is Mr. Ashwin Balasubramanian. He has posted, he has sent this question directly to me. The question is regards to GST on electricity in water. Is it possible to file under protest and litigate? Wanted to ask with regards to GST on electricity in water. Is it possible to file under protest and litigate? Achha, electricity and water. Okay. So just he has clarified with regarding to GST on electricity and water, is it possible to file under protest and litigate?
So any of you want to take that question?
I think we have number of times discussed within this, and I think, and you were summarizing also that, and Srivatsa also said that we don't need to be smart. There is an input credit which is available. There is a benefit which we can get if we, upgrade our systems, get those open access things. Not trying to be smart and focusing on other things is going to be the crux of what I feel. That is how, and everything is available. You can't skirt around the issue. Government is going to come pure agent. You can't become a pure agent.
I think from a law perspective, for pure agent, you need to have a distribution franchisee, or you should act as a discom over there, which in mall industry probably I haven't seen many examples around it. So that is one. Second, as Ishwaran was pointing out, that look, even if you are providing water, you are giving a facility of RO in your mall, and that itself is a kind of service. That's a very basic examples. I'm not even getting into electricity, which is again a technical, where you provide separate meters, you help them in order to get a setup, you give them normal shell, the CSUs get linked to that, you give them common electricity, and then you help them how much it needs to get charged. So these are actually services which you are actually giving it to the retailers. And secondly, most important, everybody gets credit, barring a few FNB, which unfortunately they have to take this as a cost. Till the time there is exact clear-cut guidance and circular from the GST official saying that the mall industry doesn't need to charge GST on water and electricity. Till the time very clear circular comes, I think it is wise for us to charge water and electricity. And I don't know, Orissa High Court, there's already a judgment. Paying under protest might not help. That's my 2 cents here. Ishwaran, you want to answer that?
I agree with you. So, to the extent that conditions to be a pure agent is extremely intricate and very difficult to align. So, I am completely with you in terms of your thoughts. And I think, and paying under protest is also what you're actually at the end of the day recovering it from your retailer, and the retailer is getting an input credit. So there's no ability unless you change the model, right? Wherein you're like, it's not like an export of service where you can claim for a refund, right? So at the end of the day, it's passed through, and the other guy is also going to end up claiming credit. There's no way the department is going to refund that amount back, even if you pay under protest. So I don't think that structure works, specifically for pass-through elements, wherein you end up being only an intermediary to bill for services.
See, we got a message from Ashwin. Thank you. Just a thought, agree with the panel. So we have given the solution. I think let's conclude the session. And I'm thankful to all of you for sparing your precious time and sharing your insights. And I hope and I'm confident that all my viewers must have learned a lot from this session. It was really a learning session for participants. So once again, I thank you on the behalf of Shopping Center Association of India.
Thank you
for sparing your precious time.
Thanks everybody.
Thank you.
Thanks on the panel.
Thank you, everyone.
Thank you very much.